Alright traders, welcome back to this new week's and as well as new month's open technical analysis update. And today it is the 31st of January 2026. It is a Saturday. So we will be going through technical and as well as fundamental analysis update to see what will transpire in the next month. So we will be also addressing the previous 2 days retracement that most of people call a crash, to see how we are going to be taking advantage of the price action that is being presented and what does it mean to traders. Should we be freaking out? Is it an overall reversal or is it just a deeper retracement? We will be going through all of this. So far, we have just closed the first month of 2026 and we need to see what is going to be transpiring into the second month of February of 2026 and as well as the overall quarter of 2026. And we'll be starting from the monthly, drop on the weekly, and then final on the daily for clarity and more information. So let us drop on the monthly chart. So dropping on the monthly chart, as we can see, it is an overall bullish price action. The trend is clearly bullish, and referring to the previous month's range, it is a bullish up close. It has closed above December highs basal liquidity, which was our goal. To those who watched my analysis that I shared at the beginning of the month and also mid-month. So far, if we reflect to the current price action, we can see that we have the previous month as a bullish up close, and our anticipation will be continuation bullish programs. But the question is, in the retracement that we'll be anticipating, how far will price drop into the previous month's range, and what will be the support area where we'll be anticipating a complete reversal in order for price to continue higher, creating higher price action and also closing above previous month's high basal liquidity. But when we look technically on the psychological levels, we have a level of 6,000 psychological level as our main target so far. We have already reached above 5,000 psychological level, but the retracement has made us to rebound between 5,000 psychological level and as well as 4,000 price level. So what am I anticipating? Personally, I'm anticipating that if we have a deeper retracement in reflection to the previous days, the 2 days, which was Thursday and Friday in the previous week, if we get a continuation or a short-term retracement continuation into discount or into the previous month's range, I'll be anticipating to see at least price reaching out to 4,500 psychological level and use it as possible support before it bounces off to reach out to 5,000 once again and then break above to close above previous month's high basal liquidity. Personally, I'm projecting to see a close above January highs between February and also March. So it can be closed above in February. If that fails, we need to be provided with February as a bullish up close in order to call for continuation bullish in March and close above January highs, because now this is a significant high according to the reaction of that level. So when we look into the price action here, we can all see that this is our possible support area, but January lows is my protected lows. I'm not anticipating to see price, if we are to continue higher or if we are to sustain a continuation bullish programs, I'm not anticipating to see price closing below January low basal liquidity. But if there is a possibility on the flip side for us to see a close below that, that will be calling for a complete reversal and a long-term retracement or consolidation in price. But overall, our trend is continuation bullish, and we'll be getting a point of interest or a support area in the previous month's range as we are sustaining the previous month's low, and then we'll be calling for a draw on liquidity, which is previous month's high basal liquidity, and eventually if there is a possibility for price to reach out to 6,000 psychological level. This is my monthly perspective. Away from the monthly, let us drop on the weekly for more information. So dropping on the weekly here, as you can all see, we have had a previous week's range as a down close candle, rejecting off the 5,000 psychological level. Literally, it reached out to 5,500, which was also a resistance zone. So it provided a level of resistance in price, and price is short-term retracing. Personally, I don't want to say that price has reversed. I don't want to jump into conclusion until I receive a close below previous month's low. Then I will confirm a complete reversal in price, and we'll be calling for a deeper retracement, because when we are trading, we have conditions. So far, as we have just talked about, we are sustaining on the higher time frame, we are sustaining previous month's low, so liquidity, which was the low of this down close candle, right there, this is the protected low, meaning that any retracement business has to be done between these lows and this high. So how far are we anticipating to see price retracing? Due to the fact that we had a down close candle in the previous months, in the previous week, we will be calling for a short-term bearish trend, meaning that even if we are wrong in our continuation bullish programs, we will be right fast, meaning that we'll be having short-term bearish programs until price reaches out to a discounted point of interest for support before it delivers continuation bullish program. So the question is, how far will price draw below? So when we look here, remember, when we are dealing with the swing perspective of trading, we use the monthly as our directional bias, the weekly as point of interest, and also the daily for confirmation and continuation. So we needed to get a point of interest where we'll be anticipating to have possible support before we get continuation bullish programs. Personally, I'm looking at this fair value gap, which is mitigated or which is merged with the gaps here. We have the new week's opening gap above here and the new week's opening gap below here. So price might decide to fill those gaps before it pushes above. I'm looking at this fair valuation gap and I'm looking at a close below previous week's low source of liquidity in order to confirm a retracement into this area. So that goes for a short-term retracement or a short-term bearish trend in price for the next week. In the first days, if we are to create the low in the first week, if it is to be extended to the second week, that means that we might have a complete down close candle in the next week before price finds possible support of a discounted point of interest and then providing continuation bullish program. So if price decides to sweep through the fair valuation gap, I'll be looking at this order block as our possible support level and then eventually to 4,500, as I told you that it is a psychological support area which might provide support to price before it delivers continuation bullish. So what are we anticipating in the first week of the month? The first anticipation is we have two variations. The first anticipation is an open, a short-term retracement into a discounted point of interest and then a rejection of that level. If we are to continue bullish, and then we'll be having continuation bullish programs in the second week. That is what I'm anticipating. If we are to have continuation bullish, we need to see price providing or reaching out to this discounted point of interest and providing possible support to price between the first week of February and the second week of February. Personally, I'm not saying that price is not going to reverse or it is not in a bearish trend, but in my perspective, I'm looking at it as a short-term bearish trend before continuation bullish programs, because this is profit taking. And even if we look into the geopolitical side, we can see that we still have tension between Iran and the US. The war might escalate at any point, which can call for bullish price action in gold. We still have the China. We still have China and Japan. We still have also US and Venezuela, and also we still have the Ukraine-Russia war. Those all, if they escalate, they can constitute to the push of gold to the upside and the drop of the dollar. And we also, if we look at the main reason why price was short-term retracing, it was due to the appointment of a new chair of the Feds. That is number one. Personally, I'm still looking into that information on how far it will affect price. And also we can see that the GDP of the US in the previous release, it was stabilizing and also it was beyond expectations. It did very well. It can also call for a push in gold, in the dollar above, and also a retracement in gold. And if we look at employment rates, they were also performing way better. So that can call for a push in that can also call for a push in the dollar and also a retracement in gold. And if we reflect off the dollar chart here, you can all see that price was rejecting, and personally I'm anticipating to see price finding possible resistance of this level, and then we get continuation drop in the dollar. So when we go back to the to gold, we can all see that our protected low is January low, source liquidity, and then our drawn liquidity is January high, plus liquidity, and we'll be anticipating to see price short-term retracing in any perspective towards this discounted point of interest, and then rejecting off that level to provide continuation bullish. And I need to remind you guys, this might be the best entry on gold in the year, and we have discussed this about this trade, that we'll be taking for a full year. Personally, I'll be holding it for a few months, like 5 to 6 months, to see if we can capitalize off that trade. So away from the weekly chart, let us drop on a daily chart for conclusion and confirmation. So if we drop on a daily chart here, we can all see that we have had the previous 2 days very dramatic, dropping, cleaning out a lot of pips. Literally, it delivered like thousands of pips. So if we can analyze the previous week's formation, we can see that we have had a late week reversal, which is the Thursday reversal program that constituted for a continuation bearish programs on Friday, reaching out to Monday low. My main target was to reach out to Monday low and then to see if it can close below that level or it will be rejecting. Now, due to the closure below, and we are calling for short-term bearish programs, personally, I'll be calling for next week's Monday and Tuesday and open a retracement into the premium point of interest, which is a daily mitigation. This Monday price action, it is a mitigation block, and then price providing continuation bearish programs until it taps into a discounted point of interest. And still, we can all see that on lower time frames, here we have a gap at that very point and also an order block at that very point that can provide support to price before it delivers continuation bullish program. So the main target is to see price creating external buffer liquidity at around 5,600 psychological level, and eventually if price breaks above that level, to see if price can reach out to 6,000 psychological level. But the main support area that I'm looking at is the fair valuation gap on the weekly and also a weekly order block, and still a psychological support level, which is 4,500 psychological level. So away from the daily, dropping on the 4-hour, just providing clarity a little bit. Why am I anticipating a retracement, a bullish movement between Monday or Tuesday until price hits a premium point of interest is due to the daily mitigation block and also a 4-hour order block, and still reflecting off the previous 4-hour close. So what we want to see is how will the 9 p.m. 4-hour candle provide on Monday. Is it going to push towards that level, or is it going to provide a down close candle? That will be calling for a trend on Monday, and if Monday closes as a bearish down close, it will also call for continuation bearish programs immediately on Tuesday, Wednesday, and Thursday. So I'll be updating you with the information midweek as price is still escalating and moving. And with this information, I'd like to wish you a good day and good trading.